Hello Realtors, this is Lydia Smith of Mortgage Talks. FHA notified lenders in April of 2016, I think it was around that time, that they would no longer accept the student loan provider calculations for deferred payments, IBR, which is income-based repayments, nor forbearance. So we lenders were scurrying to close all the borrowers in our pipeline with student loan payments. Needless to say, it drove us absolutely nuts. We were practically putting people in homes who still had apartment leases that had not been fulfilled because they were not going to afford the home with the new FHA calculations in place. We lenders had 2 months to close all the loans for the borrowers who would be affected by the revised student loan payment guideline. Presently, FHA uses 1% of the balance of student loans. Let me give you an example. If the balance on that student loan is $100,000, then the payment of $1,000 must be included in the debt ratios. Now with Fannie Mae, they're a little bit different. The payment must be a minimum of $1. It has to be greater than zero. Now, if you own the income-based repayment plan, still talking about Fannie Mae, we lenders have to use the amount the student loan provider provides and can use the payment of zero only if the student loan provider provides a payment of zero on Fannie Mae loans. Second option, still talking about Fannie Mae. If that loan is deferred or in forbearance, we must calculate 1% of the outstanding loan balance. Again, that's almost using like an FHA calculations. $100,000 loan, 1%, a $1,000 payment we must use if that loan is deferred or in forbearance. Now let's talk about Freddie Mac. If student loans are in repayment, deferment, or forbearance on Freddie Mac loans, number one, if that payment is greater than zero, we must use the monthly payment on the credit report. That's good. If the payment on the credit report is zero, then we lenders have to use 1/2 or 1% of the outstanding balance. Example, if the outstanding balance is $100,000, 1/2 of that is $500. That is the payment that must be included in the debt ratios. Now, the basic requirements for both Fannie and Freddie is as follows. Minimum of 620 credit score. I have to tell you this, I've only seen credit scores of 640 or higher get approved. The credit must be almost squeaky clean, and both Fannie and Freddie would allow for unpaid medical collections. But remember, they prefer squeaky clean loans. I am Lydia Smith, NAREB Mortgage Committee Chair. You can reach us at mortgagecommittee@nareb.com. And this concludes Mortgage Talks.